Alright, you're welcome back. In this model, we are going to be speaking about how to qualify zones. How to qualify zones. And basically, we'll be looking into how to determine the tradability of a demand or a supply zone. The reason we're going to be doing this is because you can't just open your chart and, begin to just draw your distal lines or just drawing zones just anyhow. You need to understand what makes a zone tradable, what makes a zone, you know why you should actually stay and take a second look at a particular zone, you know and take an interest in a particular zone. So that is basically what we are going to be talking about in this module. Okay. All right. So when we speak about qualification of supply and demand zones, we are actually talking about, there's actually some factors that you should take into consideration, to decide whether you should take a particular trade or you should, stay away from that particular trade. So talking about, focusing on high probability setups. Okay. All right. So when we are looking into qualification of zones, qualification of a demand zone or a supply zone, the very first thing you want to pay attention to is the strength of the move. The strength of the move. The strength of the move. That is actually the first thing you want to pay attention to. Okay. Now we're talking about the strength of the move. We are talking about how strong and powerful the move is, and the basic way. Now, the basic way for you to know how strong and powerful the move is basically by the size of the candle. Okay, by the size of the candle. Now look at this. When the beginning of the move is quick and strong, this is actually a clear evidence that there is a bank or a financial institution behind that move. Okay. Now, however, if the market spends too much time in the zone, this is a sign that the move is not that really very powerful. So we are trying to, trade in the footsteps, follow the footstep or the footprint of institutional traders. That's exactly what we're trying to do in these markets. We're trying to, like, determine or try to locate exactly where their footprints are. Those are the places where we are interested in. We are not just interested in just any place. We are interested in where we have those quick and very strong moves. Okay. Now, the number two way to really determine the strength of the move is of course by the candle size, like I was saying the other time. Now, that's number two way. So the candles actually give us an obvious representation of the quantities spent during the move. If you remember, when we were talking about candlesticks, talking about the body of a candlesticks, that when you see big bodies of candlesticks, it's actually telling you about the quantity, in terms of money now, in terms of order, in terms of how big the order is. You understand? In terms of how big the order is, it's going to reflect in the candle size. All right, it's going to reflect in the candle size. So when you see those big candles, it is telling you I'm telling you one thing, that there is so much volume pumped into that market by certain institutional traders at that particular moment. Okay, so when you see candles that are big and have the same color, okay, it could be bullish candles, it could be bearish candle, depending on the situation we are dealing with. Okay, now that is a sign that there is a big institution behind that. It could be a bank, it could be an hedge fund, you know, it could be any one of those big institutional guys behind that particular move. So when you see candles that are small and have different colors, probably you have a bearish candle followed by a bullish candle having small bodies like that. It's actually telling you that that is not a good sign of a strong move. So when you see stuff like that, you simply just let it be or you let the market be, or you let that particular instrument, that trading instrument, it could be a currency, it could be a statistics, it could be oil, it could be gold, silver, it could be stock, it could be crypto. It doesn't matter. So when you see those big candles, okay, you want to stop by at that particular place. All right. But when you're seeing those mixture of, small bodied candles here and there, mixture of, small bodied candles of bearish and bullish candles, simply just let the market be at that particular point in time, because at that point the market isn't really doing much for you to really work with. All right. So let's really look at this particular screen, the strength of the move. How do you determine the strength of the move? Now look at this. When you see, you know, look at these big candles, look at these big candles, and look, if you pay attention to this between the second candle and the third candle over here, you discover that there is a gap in between. Now, that gap is actually telling you about the pressure of the market. Is the pressure placed on the market by the by the institutional order, that the market even has to jump, some prices and resume, trying to fill that particular order. Is talking about the urgency of the order by the institutional traders. Okay, so it is telling you that here institutions are here. Okay, now this is a demand zone. Okay, because it's actually on the move. On rally, it's actually going up. All right. Now let's look at another demand zone. Look at this, look at these, candles. Look at them. They are green, you know, candles. They are bullish candles following each other. Even though there are these about five candles, and they are all bullish, they are all bullish, moving up. They're actually rallying to the upside. All right. Now, moves like that, when you see moves like this, it's actually what is that it's really strong. These are strong moves. These are actually strong moves too. But look at an example of a weak move. You just have a couple of bullish candles sprinkled with some bearish candles, followed again by some bullish candles, on and on like that. And it's simply just telling you that there is no much strength behind this particular move. So we classify this as what? As weak move. We don't stick around this kind of move. Okay, we just don't stick around that kind of move. Okay. All right, so let's look at supply zone. The same thing that happens in demand is something that's actually happening here. Here you have institutional um orders supply orders. Okay, I think there's a need for me to put that into that. Now there is an institutional order, okay, that was really very much that came with so much urgency, right? Came with so much urgency that the market has to, you know, shift quickly from from this particular price, and jumped ahead. Just jumped in order to feel to feel that institutional order really very quickly. Now it is actually due to that pressure that we have this gap. So when you see this gap like this, it's telling you that there are institutions in the market with really very huge supply order that pushed the market to the downside. All right. Now let's look at another example of a strong supply move. Supply should we call it a supply move or a bearish move? Look at these candles. Look at these candles. They simply just they are of the same color, and they are actually heading to the downside. Look at an example of a weak move, just like the one we look at, during the time I was explaining the demand zone. You know, there you have these weak moves and all of that. This bearish this is bullish candles followed by a bearish candle followed by another bullish candle. Everything is just being sprinkled, you know just in between each other like that. All right. So basically, we are not really, interested in this kind of move. So that is going to be the end of this particular module. And I just wanted to go through what we've taught with this particular module, because it's really very important. In case you don't get it, please watch it over and over and over again. So I'm going to see you in the next one.